and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Okay, so it's deja vu. It's a repeat of what we, I think, saw yesterday. Almost exactly similar kind of price action. 100 points lower, steady since the morning. Nothing excitable either on the way up or on the way down. 24,757. Basically, just another 100-point leg lower is what you have. We are coming to you from the CNBC-TV18 Motilal Oswal studios. This is Closing Bell. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, afternoon.
Hi, afternoon, guys. And I guess it's, on Monday, I wasn't here yesterday, but on Monday, the market was still willing to shrug off whatever was happening in West Asia. But I think over the course of yesterday and most of today, I think those headlines are still weighing. There is still some element of caution. And we're seeing that. Plus, there's Fed tonight. I mean, I don't think they'll oblige the U.S. president.
Yeah.
But, never say never.
I think we can maybe one or two missiles from Trump directed towards Powell. Right?
That's for sure.
How he's not cut and how I'm very disappointed, etc., etc.
Yeah.
So I think.
Interesting times. It's got even more difficult though for Powell because now you have crude oil spike as well.
Yeah, so I will say, how can I?
We'll see how that goes. But let's get straight to the action with regard to today.
No, absolutely. So it's 100 points, not very excitable kind of session. And I mean, why don't we need excitement, right? I mean, we've had lots of excitement on the way up, maybe a little, settled in that sense. Market breadth is once again turned, and it was negative, sharply negative in the morning, and then by about 10 in the morning, 10:30 in the morning, it had flipped, and there were more gainers than losers. You can see that actually. And then we have kind of, once again, the gap has increased. So 1,800 stocks are lower and about 800 stocks are higher at this point in time. Lots of broader market stuff going on, and I think that'll be the action in terms of single stocks, etc. There's only, I mean, if you look at just a large indices, there's only auto index which is up in any way, about 1/3% higher in the auto index. Otherwise, pretty much all sectoral indices are down in the red at this point. Surbi.
Yeah, absolutely. And I mean, if I'm looking at the broader market, lots and lots of stocks in focus. Of course, we'll talk about Hindustan Zinc and what they've announced. That stock's down 7%. But where else are we seeing profit taking? Something like PB Fintech down 3.5%. CRISIL. These are names. Subros is under a lot of pressure this afternoon, about 6-7% off there. So fair amount of consolidation going on in the broader market. If you talk about the large cap space, then in terms of weakness or what's driving the Nifty lower this afternoon, a bunch of heavyweights, TCS, Lever, these are the names on the way down, even L&T. Actually, we can maybe pull up the contribution chart. So it's a wide variety of stocks across sectors which are on the way down. There's a bit of consumer for sure. Nestle, for instance, Tata Consumer. These are stocks on the lower side. There's some financials as well out there, like Kotak for that matter. ICICI Bank itself is exerting downside pressure. The counter is IndusInd Bank, which is the Nifty winner, 4% higher. And autos are revved up. There's some very clear buying this afternoon, at least, in autos. So, Maruti, Eicher, M&M, all these stocks are positive, but otherwise, Nigel, for sure, I mean, there's a hint of caution in the market today.
Well, that's right. How do you position yourself though in the final hour of trade? Mitesh Thakkar joins us on the show. Hi, Mitesh. We continue to remain in this 600, 700 point range or thereabouts. Now we're drifting towards the lower end. Normally, when you drift to the lower end, we've seen some kind of, buying that emerges. Do you think risk-reward would favor you buying at these levels, or would you look to enter lower?
Good afternoon. So I think, yes, my sense is that we should head lower. In fact, the intraday rally did, kind of surprise me today. But broadly, it is a market which is ranged, and we've, been returning, or we've been coming down from the upper end of the range, which is around 25,000. And today we got a high of around 24,950. I think we might head towards 24,600 and towards the lower end of the range, which is around 24,500. So they're mild towards 100 points on the lower side. But that's the idea. The index could very likely head towards 24,500 in the next few days.
Okay, Mitesh, what about individual stocks? Afternoon, I mean, what are the specific stock trades that you'd go with this afternoon?
I have a sell on Cipla. I think Palmolive was slowly breaking down, and we had opened earlier. So Cipla is just giving a breakdown right now. Keep a stop at 15, look for a target of roughly around 1460 to about 1455. And DMart is on the buy list of any supermarkets. That's conditional buy. The breakout happens about 4225 and the intraday high today is 4225. So just let it get past those levels. Then take a 40-point stop loss around 4185 and look for a target of around 4340 to about 4350.
Okay, all right, Mitesh, we'll come back to you with more a little later. But let's just address some of the stocks which are moving. And Avenue Supermarts, DMart is the name which I think is up. Started slow, but then it's picked up pace, about 3-4% in that range, almost 4% actually. So the company has announced the opening of its first store in Uttar Pradesh, in Agra. Total store count is at 421. Mangalam is here to tell us why this matters, and I mean, just basically looking at how they've operated when they enter a new geography in terms of what can happen here now. Mangalam, take it away.
That's true. So one of the quibbles that the street had with DMart is that they're not very fast or pacey at store expansion, and they're very calibrated. And to that extent, there were a lot of geographies in the country where a large part of the population resided, but DMart wasn't really present. In Uttar Pradesh, technically, it's a foray that they've made after Noida and Ghaziabad. But remember, Noida and Ghaziabad are part of NCR. So ex-NCR, if you think of core Uttar Pradesh, this is one of their first forays after, so long of being in business itself. And this is important because, one, Uttar Pradesh is the largest state of the country. We've seen, a fair amount of value retailers see a fair amount of growth in Uttar Pradesh itself. Case in point, we have V-Mart retail, etc. So the first store in Uttar Pradesh ex-NCR is a positive, and DMart typically expands stores in a cluster-based strategy. So once they open a store out there, they've actually managed the back-end sourcing, etc. for nearly 20-25 stores in and around that area itself. So this may be the first of many that may come in Uttar Pradesh, is what the street's reading of this is. And this increased pace of store expansion is one of the triggers for DMart going forward, along with improvement in product mix. Remember that core categories, FMCG, are margin, they're not as margin accretive as general merchandise, which has been declining as a proportion of their sales. And the third thing that we'll be watching out for in the metros that they currently operate in, which are seeing competition from quick commerce, how is DMart Ready growing? So DMart Ready's expansion in the core markets of metros, increasing pace of store expansion in newer geographies, along with improvement in product mix, is something that we'll most definitely keep an eye out on for Avenue Supermarts. The stock, not particularly cheap, but has been underperforming for a very long time.
Mangalam, I remember when Vishal Megamart listed, it's of course different kind of businesses.
Correct.
But when you say product mix, DMart does it store apparel, etc.?
Yes, DMart does store apparel, and they would get a fair amount of their revenue coming in from essentials, FMCG. Apparel was about 15%, if I remember correctly. But over the last few years, in fact, specifically post-pandemic and the advent of a lot of value fashion retailers and online retail, etc., apparel and general merchandise as a proportion of sale had started to come down for DMart, and that was reflecting in their gross margins and overall EBITDA margins as well. This at a time when there was competition from quick commerce on, FMCG and essentials as well, had a bit of a problem on DMart's overall margins and growth, and that's what the company, I think, is trying to fix. For Vishal Megamart, nearly 60-65% of their revenues actually comes in from general merchandise and non-FMCG business, and a large part of that also comes in from their own brands, which is why their margins are slightly higher than Avenue Supermarts because of their product mix. And improvement in product mix is one of the triggers for DMart as well, because in terms of value to customer, still DMart is head and shoulders above everyone else.
Okay, all right, got that. Thanks very much, Mangalam. Interesting insights over there. We also have Prakash Diwan joining us on the show this afternoon. Let's get some snippets in from Prakash. Prakash, I was just discussing retailers before you joined in. DMart is finally seeing a bit of a good day after a long time, right? So if you want to play retail, Trent was clearly the poster boy all through 2024 till it started correcting. That's right. DMart has been out in the woods for a long time. Do you like either of them, or maybe something completely different? How would you play the rise in disposable incomes that we're all set for this year?
Good afternoon, Subi. No, see, absolutely right. I think Trent started off an era which was, it was a phase where people, consumers, investors, stakeholders started really getting live to the possibility of scale in this business. Before Trent came in, we really didn't know, how big the opportunity was because nobody had actualized it, right? We know the numbers, we know everything that's positive about our demographics, but to be able to translate capital investment into, that kind of a business and convert into P&Ls, that was remarkable. And that's why they got a very disproportionate share of the market premium. And I think we are probably, that's behind us now. I don't think we'll see valuations come back to those kind of levels in P multiple terms. And what I like about DMart, on the other hand, is the franchise that they've developed, and as Manglam was saying, they stand above the rest in terms of what they can offer as value to buyers and consumers. Now, if they keep scaling up, and today there was some news about them scaling up. I mean, setting up another store in somewhere in Agra. They did some time back somewhere in Ghaziabad. So what they're trying to do is getting into tier 2 towns, which has been the most profitable and successful story till now, them as well. And if they continue to accelerate that and without worrying about metrics and being compared with others, till the geo retail issue happens, I don't think there's anything better than Avenue Supermart. But are you willing to pay top dollar for that is the question. I'm a bit conservative when it comes to valuation, so I don't like businesses which are fully priced or overpriced, even if they offer great moats and all of that. So I would stay away from it personally. But I think representing the sector, I mean, any allocation that you were to make, there's nothing which probably seems better placed than DMart at this point in time.
Okay. All right. So a little cautious on DMart because the valuations take that point. Let's move to the other stock that's managing to buck the otherwise weak or slightly sluggish market trend today, and that's IndusInd Bank, up 4%. It is the biggest winner on the Nifty. And that's thanks to a call that's come in from Nomura. Nomura is sounding quite optimistic. Nomura seems to be saying that a lot of the legacy issues, regulatory issues, perhaps are behind the bank now. Let's first go across to Hormuz to get a lowdown on what exactly is the brokerage arguing, and then we'll ask our guests about it. Hormuz?
An upgrade coming in, of course, after a spate of bad news that we've seen for IndusInd Bank over the last couple of months. Now an upgrade coming in from Nomura. They've upgraded the stock to buy from their earlier rating of hold. They have also raised their target by around 50% to 1,050 now from 700 rupees earlier. And as you were highlighting, the key aspect that Nomura has highlighted here is the fact that most of their legacy issues, the bank has addressed them, and their ROA, the return on assets, is likely to improve to 1% by FY27. Now, all of this, they intend to find a new CEO soon. The names that need to be given to the RBI, the issue, addressing the issues at hand, as and made Nomura say that the bank wants to start FY26 on a clean slate. And another key trigger that they are highlighting is that in case the RBI does give their promoters an approval to increase the stake in the lender, that will allay a lot of the investor concerns on the street as well. Remember, the promoter has been wanting to increase stake. He's awaiting regulatory approval for the same. And lastly, they also say that at the current price at 0.9 times price to book 1 year forward, the valuations are inexpensive, they are attractive, and as a result of which they are upgrading the stock, raising their price target, and as a result the stock bucking the trend today among the top gainers on the index.
Yeah, absolutely. It is bucking the trend today. And actually, I mean, it's risen quite a bit from the lows. Hormuz, thanks very much for that. I was just looking at a slightly longer price chart. So at the bottom, IndusInd became about a 650 rupee stock. And from there, it's already seen a 200 rupee rally. So the question is, should one be playing for a pretty swift turnaround or not? We'll ask Prakash that in just a second. But Mitesh, if I could just come to you, I know this is a very news-driven stock right now, but if you just go by price charts and structures, then what's the sense? Would you be a buyer in IndusInd?
Yeah, I think, in the short term, yes. I think the stock is extremely oversold, trying to reverse from those levels. There is a mild pivot around these levels of 853, 855. That was the high which the stock made last Tuesday, as well as this Wednesday on the 2-hour closing chart. I think that's the level to wait for the stock to clear. But once it clears 855, I would look at a possible target in the range of about 930 to 950 to begin with, and even 1,000 rupees. So there is a good potential trading upside from a short-term point of view. It definitely interests me.
Okay, all right. Got that. Well, Mitesh, I want to ask you about a couple of other names, that are making a bit of a mood in today's trading session. Biocon, that stock, in fact, is a little bit lower as we speak. What's it looking at like on the charts?
Yeah, I think, there was a positive movement a couple of days back, and then since day before yesterday, I think the stock has started to taper off. The first support is around the 340, 336 mark. It's down there. If it breaks that, we'll look at more downside. Otherwise, it's a 340, 360 kind of a zone.
Okay. All right. Got that, Mitesh. I think we've got Prakash back. So let me toss that innocent question to him as well. Prakash, I mean, we were just discussing this Nomura report, which is making the market excited today. But I think this is a wide debate. It's still open. Whether the turnaround and the move back to growth is going to be swift and fast the next couple of months, I mean, everything goes back to better than normal, or whether this is going to be a time-consuming affair. New management comes in, cleaning of the books, maybe a forensic audit, and then you get back to growth. So which camp would you be in? Buy IndusInd or stay away?
So I expect all that repair to be possible, but will take time. So I would wait for things to kind of start looking up. So I'm in no hurry to buy. Of course, you'll probably miss out on the first 15-20% of an upside, but you want it to be a stable entry into your portfolio. You'll have to see that repair being undertaken and its impact being felt. So at least 6 months away is my sense. But yeah, the bottoming out process seems to be very evidently done with. And I agree with this report to that extent. But I'm not getting too excited to buy it just because the bottoming out is over. You'll go through a time correction of sorts before it starts kind of really going back to its glory days of 1,100-1,200 bucks.
Okay, I think, Prakash, we'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC-TV18 on this session Closing Bell. What we'll do is we'll take a quick commercial break here. We're going to come back and focus on markets some more. 60 points. So there is some recovery which is coming in, but not very much either. Alok Agarwal of Alchemy Capital Management with us in just a bit. Okay, welcome back. You got the market, which of course is down about 60 points, 24,790 at this point in time. We have Alok Agarwal, who's now joining us of Alchemy Capital. Alok, good to have you back on the program. Thank you for your time. I've got your holdings by weight as of the 31st of May. And I don't know when you bought BSE. BSE is the highest weighted stock. I don't know when you bought it, but I was till at least about 10 days back when I looked at it, it was the number one performing stock in the NSE 500 list. In terms of large stocks above a certain market capitalization. I don't know if you've ridden the full wave, full up move. We had the BSE management with us, by the way, today. Seemed pretty unfazed, saying that, change in expiry day doesn't necessarily have to hurt. There are other levers they can use to protect market share, especially in the option side. Just wanted your thoughts here.
Sure. Hi, Prashant. A pleasure to be here. Yes, with this particular stock, we have been able to participate for a major part of the rally. I could not say that I have bought exactly at the bottom, but for more than a 1.5 year holding, I can't be complaining with the rally in the stock. And also to a large extent agree with the kind of change in the expiry date. Of course, Tuesday was a more preferred expiry date. Coming to Thursday, the back of the envelope kind of calculations show that a 22% market share may come down to an 18%. That's what the consensus numbers are also reflecting. But yes, with the kind of better products, better execution, and innovative strategies being used, I would say that, yeah, there's a good chance of more and more growth coming this way in this particular part of the markets.
Okay, Alok, hi, good afternoon. Great to have you on the show. So, give us a sense where going forward, next, 1 to 2 years at least, you see substantial clarity on earnings growth, because the market always wants to reward, the growth centers or the growth companies. So, if you could identify some pockets where you're beginning to see that, where you perhaps will take a bigger allocation call as well at some point.
So, I couldn't agree more with you. Yeah, it's the earnings growth that gets rewarded. If you look at the major index heavyweight sectors, the sectors also actually did very well in the prior decade. Those sectors' growth are actually not coming through. They're actually lagging the nominal GDP growth also. The likes of oil and gas, the banking space, the FMCG, and the IT. But the growth is coming from elsewhere, which are not really a part of the major indices. So in consumer discretionary space itself, be it the hotels, to an extent aviation, in the whole tourism basket itself, some part of retail, even in pharmaceuticals or other healthcare, the hospital segment is doing very well. Within financial services, we are seeing some platform companies and especially the capital market players are doing extremely well. So there are pockets of growth emerging, but they are not really coming down from top down, the larger segments. That's why we are seeing those segments not really doing too well. Even in the manufacturing and industrial space, we are seeing good growth coming from the power side, the defense side, and with the government's focus continuously on increasing the manufacturing share in the GDP, we might have more and more of such growth contribution coming from the cyclical side of the markets.
No, absolutely. And kudos to you for having identified some of those pockets and opportunities, Alok, because again, if I go back to the top holdings, and you mentioned capital markets, of course, BSE we've discussed. You've also had MCX. You mentioned power and Hitachi Energy and GE Vernova. Some of these stocks have done so well, and you have them in the portfolio. Also, Mazgaon Dock, which is, I think, almost 5.7% of your holding. On defense, a little more broadly, do you think the stocks are already pricing everything to perfection? You already have the stock, so that's great. But is there any sense in buying afresh into any part of defense?
A lot of times during the investment journey, we come across certain groups, certain sectors where the runway of growth is pretty long. I think defense falls in that bracket. Till a few years back, India was completely dependent upon imports primarily. Although we spent a substantial amount of our budget inflows into the defense side, almost 50%. And half of that is to go on the admin and the salaries and the remaining in the imports. Over the last few years, we saw some shift happening towards the import substitution. And especially of late in the last couple of quarters, especially, we have kind of demonstrated our capabilities in terms of exports also. And especially in the era that we are living right now, where skirmishes, short-term wars keep happening in various parts of the world, the demand for such things is on the defense side is actually going up. The broad numbers speak that roughly the global defense expenditure is close to $2.5 trillion or so. And with this kind of wars erupting every now and then, I wouldn't be surprised that the allocation on the defense side globally goes up. Even if it goes up to, say, $3 trillion or so, a small portion of that, even 1% of that coming India's way as export opportunity, there's a long runway of growth in this segment in our view. The players are showing their capabilities in terms of execution as well. So you're absolutely right. So we're looking at the near-term earnings, the valuations will look stretched. But given the longer-term higher growth run rate, this sector will keep on giving opportunities of finding winners and riding them.
No, absolutely. And I think it's an interesting portfolio. Actually, it's a portfolio which has done very well. You know, holding this portfolio, I'm assuming, Alok, you've done very well. It's a mix of power. You've got exchanges, not just BSE, which we discussed, but MCX as well, defense. You got Interglobe. I mean,
he's got all the winners.
Yeah, Prashant, I can't be complaining, but as a fund manager, we keep getting greedy. So the more you get, the more you want to do it right. And of course, there are times when you don't get it right. And markets are volatile. Certain news flows or certain actions do happen. And but the kind of method that we have been following is more like a binary method, wherein something that is not really growing too much or isn't really performing, especially in terms of earnings growth, and the visibility is lacking. So having the courage of not taking them in the portfolio at all, rather than playing through a minor underweight, that also helped us.
I mean, what I can see, maybe you do own them in small sizes, is you don't own any financials, any banks, etc. Right?
So, yeah, Prashant, financials is the highest proportion of the fund. It's around 29.5%. But you're absolutely right. There's not a single bank out of that 29.5%.
Okay. Oh, 29% is financials, but no banks. Okay.
It's predominantly
you counting
the capital market.
Yeah. Okay. The MCX and BSE and others, basically. Non-banks. Exchanges, capital market plays largely.
So
a couple of lenders, but banks, but primarily through the capital market plays are one or two of the platforms.
So Alok, just to understand the style and the approach, you look at stock selection through the quantitative lens, right? I mean, quant strategies is something that you look at or use as part of your selection process. Is that right?
I do look at the quant strategies. I've been an active fund manager as well. So looking at the fundamental side of it and as well as the quality side of it is an important aspect. Most of these stocks, most of the portfolio has been constructed on the rule-based investing. Do look at a combination of the quality parameters, the growth parameters, as well as the price action parameters. Combining them in response to the kind of market we are in, as in case we are in a slightly more stronger market, so price action factors have a much larger role to play. And in a slightly more defensive or a risk-off market, the quality factors have a larger role to play. But
I brought up this point.
Right?
Absolutely, Alok. And that's why I really brought up this point because, I mean, it's been fantastic. Like we've discussed, some of your top holdings have done so well. So from here on, and if I ask you to wear your quant specialist hat for a bit, then, we've had a momentum-driven market, then value stocks did really well. But say for the next 12 months for your portfolios, from a quantitative aspect, which are the factors that you'll pay perhaps, the greatest amount of interest to or the greatest allocation to?
It's very counterintuitive. So we'll notice that the last 3 months, the markets have rallied so much. So an expected answer would have been that the momentum-driven factors would actually rule the roost. But the fact is, it's the visibility of growth that is actually happening to be rewarded, or maybe some punishment happens when the visibility is lacking. So it's the visibility of growth, a higher growth than the overall nominal GDP growth. We recently had the concluded financial year, and our corporate earnings to GDP has hit a 17-year high. So to be able to outperform, one needs to have stocks and sectors that are growing much faster than the nominal GDP. And that visibility is the one that is more important in this ever-changing world, a dynamic world. So that's the key factor in our view, which is actually getting more rewarded.
Okay. All right, Alok, great conversation. Thank you very much for joining in. and giving us perspective on a whole range of issues. Of course, some of the sectors as well, where you have overweights or you have large positions. So that's a word coming in from Alchemy Capital. Well, with that, let's just go back to the market. The Bank Nifty has actually turned positive. So we're seeing about 113 odd point move on the Bank Nifty. The Nifty is also recovering. The mid-cap index is also trying to cut its losses. So this is one more attempt, one more wave. I mean, today's been a choppy day in a band, but now the market is trying to get off the lows. Let's see. It's still got half an hour. So let's see if the bulls can manage to make their presence felt. We'll take a quick break, come back with a lot more. Of course, the buzz from the dealing rooms coming up with Nimesh in just a bit in D Street Chatter. And of course, some final trading calls as well.
You have stood up and stood by many of India's dreamers.
I became a magnet for entrepreneurs. So there's one man who will hold our hand and take us all the way.
So what is the art of deal making?
So whenever the deal maker wants to become too big, oh, I'm God, okay, you say this and you say that, kind of attitude, not literally, but I've seen that. What percentage of people you think die, Shireen, with regrets in their hearts?
A very large percentage.
So this risk of failure, fear of failure, is the one that makes people die with regrets.
What is holding us back?
Promote and protect the good. Prevent and punish the bad. We prefer to be slow rather than fast. That's how we are a chalta hai country and not a daudta hai country.
The lack of speed would be, if you were to IPO India today, that would be on the risk factor side in the DRHP,
I
right?
wouldn't IPO.
You wouldn't IPO?
But to IPO, I must have a news story.
You have a special place in your heart for Charlie Munger and Warren Buffett. What have you taken from them that continues to guide and shape how you think today?
Understanding of balance sheet, because balance sheet is accumulation of good and bad.
How do you find India positioned in this mix today?
We have a resilience, we have a stability, we have a wisdom of our own. But वो हम एक scene दिखाते हैं, फिर we have a long break. Stop that.
Interval थोड़ा लंबा हो गया.
बहुत लंबा हो जाता है.
Welcome back. You're tuned into Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, keep an eye out on the markets. Actually, we've seen a good recovery from the low point of the day. I think the Nifty Bank has turned around a little bit. IndusInd Bank, that one is up close to around 5% as we speak. So that's zooming away. Good recovery on the Nifty Bank itself. Nimesh joins us to give us a sneak peek into D-Street chatter. Nimesh?
And another day of consolidation and a range-bound trade. And I guess that's largely because of the ongoing geopolitical risk, and that persists, right? So, which is why you're not seeing big actions in the cash market or in the F&O market. From a flow perspective, another quieter day, so to speak, because again today a couple of large blocks will include, likes of Vedanta, and there was a Sky Gold block as well. So that will have an impact on the domestic number. But barring that, there is not much action, is what I understand from the larger institutions, even in today's market. The only space which is done well, and that was a feedback yesterday as well, that there is buying in select private bank names, and that stands out today as well. And that explains, the likes of Bandhan Bank, IndusInd Bank, all buzzing in trade today. Again, from a direction point of view, I guess the trend of large blocks are likely to continue. Every day we are at least hearing 2 or 3 large blocks, and the pipeline looks quite strong as well. Technically, 24,450 is a level to watch on the downside. I've been saying this for a while now, so nothing much to add there. But broadly, it's a range-bound day of trade, largely on the back of geopolitical risk, and there is lack of participation as well from larger institutions.
Nimesh, what is the chatter list today in terms of stocks?
So the first stock on my list is Sky Gold. That stock is locked at 5% down circuit today after a large block deal. Again, from a detailed point of view, I guess the promoter entry was a seller, and a couple of domestic mutual funds and few HNIs were buyers. So again, disclosures could be quite interesting in Sky Gold block. Nearly 5% equity had changed hands. The second stock is IKS. Big underperformance today. It's down 7-8% and large volumes as well. Even for IKS, the buzz is that you will hear a large block deal in IKS very soon, and one of the strategic investor could be the potential seller there. So that's the second name. The third stock is IndusInd Bank. I spoke about some bit of buying interest back in private banks. IndusInd stands out on back of very strong buying flows, as well as the number of upgrades as well. So that explains a big move there. And the last is Asian Paints. After the clean out trade, some bit of institutional interest seems to be back in Asian Paints. So I understand at multiple FI desks there is buying interest from larger institutions in Asian Paints.
Okay, all right. Lots happening there. By the way, Nimesh, remarkable resilience, right, as we were discussing earlier with regards to BSE.
Oh, yeah, absolutely. So I think it surprised everybody. And, Prashant, this is despite the fact that the stock is in ASM. So for any new buying, you need that delivery base, the funding as well to buy into that stock. So and despite that, and despite so much of brokerage notes suggesting EPS cuts and earnings cut, the stock hasn't fallen much. So maybe there is a lot of fan following or so-called love for BSE at this point in time.
Absolutely. Nimesh, so the Sky Gold, IKS, where there perhaps a large block deal coming down. IKS is just, it was up 8% yesterday, it's down 8% today. But there's a block coming, as Nimesh says, and IndusInd, Asian Paints are the others on the chatter list today. We'll keep a track on these. Mitesh is back with us with what he'd like you to do as far as specific trades go for the short term. Mitesh, what do you have?
Very honest, it's very devoid kind of a market. Market is not doing much, but I was talking about IndusInd Bank getting past 850, 855 marks. We take a BTST here. In case it starts getting past 855, 860, we will add on to the position. What is happening of BTST, they start at 843 and a target of around 865. And I hope that once this 855, 860 zone is cleared, the stock can get into a slightly stronger trend on the upside. And JSW Steel is an STBT. Keep the stop at about 993.5. Look for targets of 970.
Okay. All right. Thanks for that, Mitesh. And thank you for all the trading calls through the day. We'll connect with you again bright and early tomorrow morning. Let's actually look at the big story of the day. And really that was the final clarity on which exchange will have their individual weekly expiries on which day. So now it's all very clear. SEBI has approved NSE's request for weekly futures and options contracts expiry on Tuesday. BSE's proposal for Thursday expiry has also been cleared. To understand what this means, Prashant caught up with Sundaraman Ramamurthy, MD and CEO of BSE, because there was a lot of worry in the market about whether this move to a Thursday expiry for BSE, whether it's going to lead to a drop in their market share. Listen in to some excerpts from that conversation.
Since NSE requested for Tuesday to the regulator, in the overall interest of the market, BSE decided to go with Thursday. Thursday is a good day, so we have gone with that. BSE gained market share when its expiry day was Friday, which is not a very ideal day. What we should recall is, at that point of time, every day there was an expiry day. BSE didn't have an option but to go for Friday. And BSE gained all its initial market share, only with Friday as an expiry day. And if you look at the international scenario, B is US, B is Eurex, be it Korea, Taiwan, Kospi basically I'm talking about, Japan, many of them have their expiries on Thursdays or Fridays. So if you're thinking of relative value trading, Thursday becomes an ideal day. See, we have around 525 brokers now. We want to increase it to 600 to 700. Our concentration is on foreign participants and brokers and racks and our technological capabilities. On brokers, I told you the numbers. On foreign participants, we have around 290 to 300 foreign participants today participating with us. We want to increase it to at least 500 over a period of time. So timeline put this, end of this financial year, we should have 200 racks.
Okay, all right. Well, that was a conversation with the management of BSE earlier today. But let's focus on Hindustan Zinc. Well, the big headline that we got today was that the promoter entity went ahead. That's Vedanta, went ahead and skimmed off some stake. Close to around 1.5% is what they have sold. They've raised close to around 3,000 crores odd. Now, that was the large trade that took place earlier today. And in fact, the management has given their clarification on the exchanges. What they go on to state is, in fact, that they've raised this money in line with their strategy of the demerger, as well as going ahead and focusing on individual verticals as well. Now, for Hindustan Zinc, this sale comes a day after they laid out their big ambitious plan of adding capacity in zinc-lead smelting and also going ahead and increasing some capacity in silver. This is phase one of their expansion that they've announced. The total capex will be around 12,000 crores approximately. They said that they'll be funding it via internal accruals as well as via debt. So that was the plan. For Vedanta, though, that stock will be in focus from now on. Today, they went ahead, they declared a dividend of around 7 rupees. But this is basically the pass-through of the dividend that they received from Hindustan Zinc of around 10 rupees. You equate it, it works out to nearly around 6 rupees 85 paise. And their pass-through close to around 7 rupees. Now, Vedanta Resources, which is the parent, will get around 1,500 crores. That's good because the parent entity, at the top, which is the parent of Vedanta, Vedanta Resources will be in better shape. Phillip Capital, they are factoring in 35 rupees per share because they expect Vedanta Limited to continue to pay out dividend to its parent, Vedanta Resources. That's why back of the envelope calculation suggests that 35 rupees per share. And there could be some more dividend that's coming because they've raised 3,000 crores via the sale that they have done in Hindustan Zinc, Vedanta Limited that is. And maybe in fact there'll be further pass through of dividend. So we'll keep an eye out on Vedanta from here on.
Okay, all right. So Vedanta continues to be in focus. Let's move on to one more stock that's in the limelight today. Zydus Wellness is in focus on the back of block trades. Manglam is here with some more inputs on this. Manglam, fill us in.
Well, for Zydus Wellness, yesterday in the pre-open, there was a large trade that took place, about 7.3% equity, and that number corroborated accurately with, TPG Capital's holding in the company, and we expected that would happen, and that exactly is what the data confirmed post-market as well. But what was interesting is that the buyer, 7.3% stake at 1,900 rupees, was bought by Parag Parikh Mutual Fund, and that is something that the street is looking at as well. So two things that are a positive. One, that a mutual fund has gone ahead and invested 7.3% stake in the company. Second, that Trepsicare LLP, which is the TPG Capital investment arm, has done a clean-out trade. So no further supply in the very near future from this seller at least. So those two factors work for the company. Add to that, in a sector which is poised for growth, Zydus Wellness has some strong brands which are in under-penetrated categories, and the company is eyeing growth. Brands like Nycil, Everyuth, Glucon-D, Complan, and very recently they bought Right Bite as well in the protein market. So if you look at what the management had told us post their fourth quarter results, they are looking at high teens growth in FY26, and they are expecting margins to come by between 17 to 18% as well, which over their last year's number is over a 200 to 300 basis points improvement in their overall margins. Add to that, they have a category which is growing between 25 to 35%. In the last few months, that number has increased to about 40%, and that's sustainable. And they're also increasing their presence in the country by reaching over 400,000 stores, or rather 4 million outlets via general trade. So all these factors working for an FMCG company which is trading at around 32, 33 times, maybe Parag Parikh saw some growth opportunities out here, and as a result of which the street is excited by the prospects.
Okay, all right. That explains why the stock's up 6% this afternoon, Mangalam. Thank you very much for that. That's Zydus Wellness. Okay, with that, let's move on to what promises to be an interesting evening for sure, because we're all awaiting the Fed decision. The market's base case is that there will be no rate cuts, especially now because of the fears around inflation that could be induced by higher U.S. tariffs and the fact that we have a geopolitical situation in West Asia and that crude oil is on the rise. So let's actually go over to the CNBC Fed survey. Here is CNBC's Steve Leisman with the findings of what the survey is expecting this time.
Despite improvement in the economic outlook, respondents to the Fed survey continue to forecast weaker growth and higher inflation than they did at the beginning of the year and still elevated tariff uncertainty. 100% say the Fed will keep rates unchanged at this meeting. The recession probability, though, did drop by 3 points to 38%. It had been as high as 53%, but now it's down quite a bit, but still elevated. 3.9%, that's the year-end Fed funds rate, so still banking on 2 rate cuts this year. But they've kind of X'd out one for next year. At 3.55, only 1 rate cut built in, and the Fed will remain above that long-run neutral rate of 3.3%, which is the estimate of respondents here. GDP, 1.13%, that's up. That's a good thing from 0.8, but it compares with the forecast we had from January, which was 2.4%. 2026, we get back to at or above trend at 2.2%. That's 20 basis points higher than the May forecast. Doug Gordon, senior portfolio manager with Russell Investments, writes in saying, quote, recent geopolitical events in the Middle East add uncertainty into an already uncertain environment on trade, tax policy, and with potentially weakening hard macroeconomic data pending. 2025 forecast for inflation down a bit, down a quarter point, but still elevated at 3%. 2026 is when you get back to around where the Fed would be comfortable on the CPI at 260 in May. The unemployment rate also down a bit, 4.53, 4.5%, call it. That's down a couple tenths from where it was in the prior forecast. And unemployment in 2026, 4.47%. Mark Vittner, he's upbeat. He's the chief economist at Piedmont Crescent Capital. He says the economy has remained resilient, not terrified. There's no shortage of reasons to worry, but the U.S. economy keeps proving its doubters wrong. On a separate note, more volatility could be ahead, with most expecting an early announcement of Fed Chair Powell's replacement from President Trump. 64% say yes, a replacement for Powell will be named before the end of the year. 21% say no, and 14% don't know. Underlying many of these forecasts is the expectation that tariff impacts have yet to really hit the economy, along with disagreement over how much impact the big tax bill in Congress will have on growth. Both major swing factors in the growth, employment, and inflation outlooks for the year, of course, along with what the Fed ends up doing.
Okay, well, that's Steve Leisman with what you should expect from the Fed. That's later today and will be headlined tomorrow morning one way or the other. Well, on the global reset on CNBC-TV18 Prime earlier today, I spoke with veteran diplomat Anil Truganyat on Prime Minister Modi's call earlier with US President Donald Trump. Of course, this is being talked about in the backdrop of what is coming later today, which is President Trump hosting Pakistani Army Chief Munir and in the White House for lunch. I mean, seems bizarre, doesn't it? Well, I spoke with, the ambassador, the former ambassador, on what this could be about and what implications, if any, this has on, talks and relations between India and the US. Listen in.
Well, I think it is also related to the conflict, because there have been statements that have been coming out from Pakistan that in case Iran is, bombed with some kind of a nuclear device, then Pakistan will intervene and bomb Israel. I mean, that is the thing they are saying. There is no guarantee, but this is how Pakistan is able to keep itself relevant in the bargain. And as you know, that they had hired this very influential PR company, which has arranged this visit. And as such, General Asim Munir and the CENTCOM chief have very good relations, and that's how this visit was planned. And the fact that President Trump is meeting the so-called Field Marshal Asim Munir states that they will like to buy some equipment, get some support, more support in return for keeping quiet in this bargain. Of course, Pakistan wants to show to the Islamic world that wherever the Islam is in danger, they are going to stand up. And that's how their bomb has been always projected. I mean, it was said to be Islamic bomb. And so I think that this is how they have made themselves relevant in this whole complex.
You just heard our Foreign Secretary explaining the conversation between President Trump and Prime Minister Modi. You think all that also sort of gets into play here?
Well, I'm quite sure that while Prime Minister Modi may have spoken to President Trump on several issues, and he also clarified India's position as far as the mediation and other aspects are concerned. But USA remains our global comprehensive strategic partner. And the kind of shifts that is being witnessed in recent times, for whatever reasons, maybe transactional or otherwise, is definitely a cause of concern, obviously. So I'm sure the Prime Minister Modi would have told President Trump about the terror dimension, essentially, of Pakistani state, which uses it as an instrument of its foreign policy against India. So that the clarity is very much there. And hopefully President Trump will tell Asim Munir to not use that as an instrument anymore if they want to continue to have some kind of assistance from the Americans. But since for the superpowers, especially the United States, everything is a part of the chess game, we'll have to see and figure out ourselves how things play out.
Okay, I think those headlines later tonight from the US with regards to that meeting will be very, very closely watched, and I think it's important to track. Remember to tune into the all-new CNBC TV18 Prime programming. So these are the programs that we have for you every day, bringing you insights from policymakers, business leaders, economists shaping the world and India's future. So you've got the Global Reset at 12 noon each day, Monday to Friday. You've got the Big C tracking currencies, commodities, cryptos at 1 o'clock. And then later in the evening, you have the Global Lens with my colleague Parikshit. So that's the lineup on CNBC TV18 Prime. We'll take a quick commercial break here. We'll come back with Mayuresh Joshi on the other side.
Welcome back. Just the last 4.5 minutes of trade left. We have Mayuresh Joshi joining in for some fundamental ideas. Mayuresh, good to have you on. So the market has been fairly resilient. I mean, it hasn't collapsed in the face of what is a big conflict out in West Asia, but there's still caution out there. Let's talk about some of the stocks, which have been facing a little bit of this correction, cool off, so to speak. On the particularly within the oil and gas space, do you have any clear, actionable, things to do because of any anticipated move in oil prices? Right now, when crude spiked, it's staying around that level. But whether it's oil marketing companies or the few upstream players that we have, I mean, any buy or sell advice on oil and gas stocks?
Afternoon, Surabhi. No, again, I think it's very, very fluid and transient as we speak. So since the conflict has escalated over the past few days, we've obviously seen Brent prices move significantly higher from the levels they were a few days back. And therefore, I think the kind of momentum that you are probably seeing in upstream stocks is a very logical reasoning. However, I think in what direction will oil finally move? Does this escalate? Nobody knows. How far will the escalation last? Nobody has a clue. Will it end in the next 3 or 4 days? Nobody has a clue. So because there is so much of uncertainty around the entire escalation in the Middle East right now, I think it's really very difficult to take a strategic call in terms of where prices might head, both in terms of how Brent is placed, how LNG is placed. And therefore, I think oil and gas prices might be very, very fluid, very, very transient. We'll have to see how the entire global political aspect probably goes, how the crisis in the Middle East unfolds, and therefore then take a probable call. But we are not taking a call on the sector as well. I think we're more on the sidelines, seeing what is probably happening for crude and gas in particular.
Hi, Mayuresh. Good afternoon. Good to see you. When, earlier the starting of this week, we thought maybe there'll be some de-escalation. Just going by the cues, that we're looking at, Trump left G7 early, saying something big will happen, national security. I just hope that we're not bracing for escalation, in the next 24 to 48 hours. And that's the hope, from an equity market perspective, humanity perspective as well. That said, let's talk about a couple of stocks. The big loser today is Hindustan Zinc. It was at around 540 rupees a week ago. Today it is at around 440 rupees. So that's a sharp 18% cut on the stock. It was very, very expensive, and that's why we as well were saying above 500 rupees, the two large holders will be tempted. At 450 rupees, what's your take on Hindustan Zinc?
Afternoon, Nigel. No, again, I think it's a neutral for us, I think, for two broad reasons. One, obviously, I think the kind of commodities that Hindustan Zinc has, zinc, lead, aluminium to a certain extent, silver prices moving higher, giving that amount of a sentimental reset for the stock itself. The announcement that they've done in terms of the capex, the phased manner in which the capex will come through over the next few quarters and years. Obviously, I think what will come through will be back-ended over the next 2 to 3 years. But how prices move over that periodicity of time, and specifically over the next 2 quarters, how is global demand going to reset itself in terms of all the global uncertainties that we are going through, either geopolitically or on the geoeconomic front as far as tariffs are concerned. And if demand probably still remains muted, the volume of take, even if you assume silver going higher, ex-silver, will still probably remain a little bit on the softer side, which then makes us believe that the LME realizations itself might remain soft. Obviously, I think the two bright spots, inventory levels are at low levels, which means any demand aspect which starts coming back and inventory refilling, which starts happening again, might lead to better prices. But I think it's very uncertain at this point of time. So I think we're better off at the sidelines, even if the stock probably gives you a 5.5–6% dividend.
Okay, all right. Stay with us, Mayuresh. Just going to wrap up things with the market and just come back to you with more questions. It's basically a routine kind of close. I mean, not even a 0.25% cut by the end of it. So 50-point recovery coming through in the last 30 minutes or so. So 24,800 is where we finally leave off at. And let me just take a quick look at where the 20-day is at. So slightly under the 20-day. Bank Nifty closed under the 20-day. Today, the Nifty is also now under the 20. But, I mean, very, very small change there. That's nothing decisive in that sense. As far as the large caps are concerned, the losers coming through in TCS. But again, bit of a reversal. Yesterday, for example, the IT stocks were all higher. So TCS was down about nearly 2%. Adani Ports, JSW Steel and HUL were down 1.5% each. On the upside, you had IndusInd Bank, which was up 5%, and that Nomura note. Titan, Trent, of course, we've been highlighting since the morning. Something like a Maruti and Mahindra. So actually, if you were to pick a pack, throw in an iShares as well, it is autos, and it showed up. The Nifty Auto Index was the only one, which was the large index sectorally, which was up and about in the green. Surabhi.
Okay, so that's the overall broad picture. On the mid-cap side, the mid-cap index has ended, of course, a little lower than the Nifty. Nifty lost 0.2%. Mid-cap index is down 0.5%. Some of the names that can be picked out, Hindustan Zinc, there was a large, of course, block trade that kept the stock in action today. But even beyond that, IKS, for instance, has lost 8.5%. Happiest Minds is down 4%. Symphony, Subros, just some examples of stocks that came under pressure. MobiKwik, look at this one. Down about 9%. So plenty of profit taking coming in on the mid-cap side. However, there were, as always, there were some gainers as well. So let me just name some of them. Avenue Supermarts, 4% as they're looking to expand in UP. And some of the stocks from the power equipment space like GE, Vernova, T&D, almost 4% higher there as well. So some interesting moves coming in, but largely down and fairly cautious in the market today. 24,800 pretty much. That's the close for the Nifty. Well, that's where we take your leave on this edition of Closing Bell. Many thanks for being with us, but don't go anywhere because we have all the market action coming up. Up next is Markets Forward.